Last trading week finished on a positive note. Traders were encouraged by the upcoming package of additional stimulus measures in the US that is due to be approved in the US Congress. In addition, improved economic prospects supported by a mass vaccination program also gave hope for a quicker recovery of the US economy. Nevertheless, the US dollar index that measures its value against the basket of other six majors closed the week down by 0.87%. USDX has tested the level of 92 points for the first time in 2 weeks. The Fed's minutes published on Wednesday confirmed the intention of the regulator to maintain dovish monetary policy in the near future. This stance of the Federal Reserve put pressure on the US dollar. On the other hand, fundamental factors continue to prove that the US economy is on track to recovery. Thus, producer prices in March were bigger than expected and looked at the biggest yearly rise in 9.5 years, so the greenback still has strong upside potential. On the euro-dollar pair, the speculative sentiment is also strong. Thanks to this, the European currency managed to rebound from a 5-month low reached last week and closed the session near the mark of 1.1900. Yet the economic data is rather weak in the EU. The manufacturing activity in Germany and France declined steeply in February, falling short of markets' expectations. Besides, the lockdown restrictions still persist in the euro area together with low vaccination process. In the meantime, the pound dynamics go well in line with the fundamental factors. The pound-dollar pair dropped below the level of 1.3700, which is its lowest value since February 5th. Investors fear that a slowdown in vaccination in the UK could delay government plans to reopen the economy. Although British Prime Minister Boris Johnson announced that he was ready to introduce the second round of easing the lockdown measures this week. Over the weekend, Bitcoin finally managed to hit a psychologically important mark of $60,000 per token and even moved slightly above it. However, crypto traders prefer not to rush with buy positions. We may well see new historic highs during this trading week. Oil traders were worried about fuel consumption in Europe, where restrictive measures are still in place and the process of vaccination is slower than expected. Besides, the rising number of new COVID-19 cases in such major oil consumers as India and Brazil weigh on the oil market. Brent finished the trade below the key level of $64 and slipped to $63 per barrel. Also, oil traders are focused on renewed talks with Iran over the resumption of the nuclear deal. This may end the embargo on oil supply from Iran, thus potentially adding more crude to the global market. This is definitely a limiting factor for oil prices. In the course of the previous trading week, gold has finally reached a 5-week high of $1,758 per troy ounce. This happened on Thursday, but already the next day there was a minor correction. Still, the precious metal closed the session with gains for the first time in 3 weeks. Gold moved higher amid a weaker US dollar and a decline in the US Treasury yields. Looking ahead, gold is likely to lose ground every time there is a strong economic data released in the US and China, as well as the acceleration of vaccination campaign. At the same time, the dovish monetary policy of the Fed, fiscal stimulus measures and restrictions in Europe and some Asian countries could raise the demand for gold as a safe haven asset. You've watched the combined review of financial markets with me, Anna Kasatkina. See you back soon.